That is just crazy. This is why we keep positions small, because you never know. Okay. All right. Well, let's go ahead and begin. Okay. Good morning. Still, I guess we got 15 seconds still until the morning. So now, good afternoon. It is just noon here on Tuesday, July 26, 2022. I believe I'm not in New York City myself, but I believe it is a rainy day in New York. Hopefully everybody's staying dry, and hopefully people didn't get too wet. Okay, so what's the big news of the day today? Dollar. I mean, I had to change all my plans. Remember, guys, told you guys the plan was still intact as long as all our indicators would behave in the same way. Meaning, at the time when the last plan was published back on Friday, I said that right now the euro is under its 18-day moving average, the dollar is over its 18-day moving average, and so those were our two really big indicators that we were looking at. Today, an early trade, actually just as like literally just like minutes before opening of the bell, we popped over that 18-day moving average. Okay. If you look at the 4 hour, I don't like using anything less than a day when it comes to charts. I just think that's a lot of noise, but I will occasionally use the 4 hour chart for risk management purposes. Okay, I will use the 4 hour chart for risk management. And in the 4 hour chart, this dotted blue line again is the 18-day moving average. Right before the market opened, literally we closed 4 hour candle above the 18-day moving average. And when I noticed that, I had to rethink my long plans and also getting rid of my risk off put positions. Okay, so I still have my risk off put positions. So just a review of what I have. Okay, I still have FEZ. All right, those puts. These are now in the profit. These are now in profit, baby. Ooh yeah. All right, so we're back in business on Europe. UVXY, it's teetering between break even and profit right now. So we're back in business in this too. All right. And then our DIA, which is kind of a disappointment, actually. DIA is not selling off as much as tech. Actually, most of the selling right now in tech is with semis, okay? Semiconductors are really being sold off right now. Yesterday, NXPI had its earnings. Let's actually see what NXPI is doing. NXPI is one of the major chip. That one is up. That one is up. But I've noticed earlier in the day that semis were down. Yeah, semis are hugely down, 1.5% down. So there must be some fears or some hedging going on with some semis, and everything is coming down with it. Speaking of one semi that we were looking at was TSM. We had a plan to short this starting at 88. I remember how I set the alert at 88 live with you guys last week. Literally missed it by 21 cents. 21 cents, which is nothing. Which is nothing for TSM. TSM has so much volatility in its stock these days. 21 cents, it should have overshot that, and that's what I was expecting. And the reason why precision is getting much harder is because of the dollar. Okay, when the dollar acts in this way, it's really hard to get nice precision, and I'll show you why. TSM, as you guys know, is Taiwan Semiconductor Manufacturing. Now, TSM, I don't know if you guys are aware, but TSM shares are not only traded on the exchanges here in the U.S., but they're also, mainly they're actually traded in the Taiwan Stock Exchange. And if you look at TSM in Taiwan, in their currency, this is actually what it looks like. It actually doesn't look so bad, right? It actually doesn't look so bad. And what I was really looking for was this level. See how this is a floor right here? See how this is a floor? I wanted it to touch this floor. It was a floor. And technical analysis 101, floors become the new ceiling, right? So that really was what I was looking for. I don't base everything just on one indicator. For example, people were saying, well, your Bollinger Band, do you always base every trade off of that Bollinger Band? Should I short every time it goes up there? No. That's just one indicator. The Bollinger Band is just one indicator. Okay, so please, guys, don't base everything off of one indicator or two indicators. Okay, there's a myriad of reasons why I chose that level. All right, for right or wrong, So this is what is that? Oh, that's the one Bollinger Band. I want two. So let me show you what two Bollinger Bands look like. So this is the 2 standard deviation Bollinger Band, and so as you can see, the levels are a lot harder to draw. As you can see, the ceiling, this was more of the ceiling or the floor in TSM in the dollar denominated charts. And as you can see in the dollar denominated charts, that's floor is harder to determine where that is. Could it be here? Could it be here? Or could it be here? Okay? It's not the same as in Taiwanese dollars. If you denominate it for Taiwanese dollars, it was very, very clear cut where that level was. That level was right here. Okay, that level was right here when you denominate it in Taiwanese dollars. Very easy technical levels here. But when you introduce all this dollar noise, okay, it becomes uncertain where that is. Where is that floor? It's because of all that volatility in the dollar. All right. And that's what makes precision way more difficult, especially the more international exposure your security has. Okay. So just to put things in perspective too, indexes are also affected. This is what the S&P 500, let's get rid of this. This is what, this is what the S&P 500 futures chart looks like, denominated in dollars. But a third of the S&P 500 trades happens in euro denominations. So a lot of us, or a lot of S&P traders, are looking at this chart. And this chart doesn't look so bad. It looks like we're just, we broke out from our June highs. And now we're just retesting those levels. That's what it looks like here, right? But if you denominate it in dollars, no, that is not what it looks like. Okay? Makes it that much more difficult. All right? Precision. Now, another thing is, if you look at some of our other securities, like for example, the healthcare ETF, look at that healthcare ETF. It is closer to June highs, and the levels are way more clear. Does it not seem that way, that the levers are way more clear on healthcare? And doesn't it seem a lot more clear also on IWM? Well, not as much. Not as much for IWM. But definitely for the healthcare sector, for example, way more clarity. Now, why is that? Well, because healthcare is mostly in the U.S., right? Usually healthcare customers, the healthcare companies in the U.S., they operate 100% domestically, have no foreign currency exposure. Most of their customers are also Americans. All their bills are also paid in U.S. dollars too. They pay usually other American companies, okay? Hospitals and whatnot, right? So the levels, because it has very little foreign currency influence, its levels are actually quite clear, all right, in the healthcare sector, all right? So that is something to keep in mind, is that this dollar, it is affecting precision, especially if you're one of those types of like precision swing traders. This could definitely affect you, and me, that's how I would characterize myself. I'm not a day trader. I look for certain key levels, edges of price structure, and I try to get a high reward to risk based on the price structure, and only entering at the edges of price structure. Okay, and that's the key to swing trading. All right, it makes it a lot more difficult when those levels are not as respected because of the currency fluctuation. Guys, just give me 1 second. I'm gonna be right back. Just give me 1 second. Sorry, guys. I had to close my window because they're my building. I think they're doing some gardening work outside. Okay, so that was like disturbing me a little bit. Okay, so so yes, that's why it makes precision very difficult. So for example, right here in end of June, when we were trying to short oil, and I said, ooh, at around 115, a little bit under 115, that's when we're gonna start scaling into some puts. Literally, we missed it by less than $1. Less than $1 when oil is making like $3 or $4 in a day move. That's nothing. Okay, we missed it by literally less than $1. All right, and again, it's because of that volatility in the dollar. It makes it very difficult to find those precise levels. Okay, but it is what it is, and I purposely am very strict about my levels. There's a reason why. Okay, when I'm on the fence on a certain trade, and one system allows me to take more trades and the other system restricts me from taking more trades, I always choose the more restrictive system when it comes to two. If I'm on the fence, I always choose the more restrictive one. Why is that? I've been trading since 2001, guys. Okay, so when I first started, I was in middle school when I first traded, and my first experience trading was 2001 during September 11th. Those experiences have scarred me, and so I've lost. I've paid a lot of tuition to the market, and so in my experience, anything that restricts you and makes you more cautious, and anything that makes you more choosy on which trades to take usually saves you a lot of money. Okay. Yeah. In moments like this, I miss out on a couple of trades. I'll miss out on a few trades because of this, but I'd rather miss out on a few trades than end up having one that is a huge loser. Okay. And this has saved me more often than not, being more restrictive on trades. So I get it. Yeah. Sometimes I don't get that trade that I want, but, it's part of my risk management. But anything that has a lot of that foreign currency exposure is going to have some tough times in those levels, in those predetermined levels. XLV, like I said, healthcare, very clean, very clean. Why? Very little exposure to foreign currencies. But we shall see. We shall see what happens with the dollar. But right now, the dollar is over its 18-day moving average, so the plan has changed. I'm keeping my risk-off spreads. I am not entering that long, okay? And one thing that I mentioned, too, to you guys was the rule of three. There seems to be this rule of three in currencies right now, okay? Let's turn on the 2 standard deviation Bollinger Band again. All right. Oops. That's the 1 standard. I need the 2 standard. Yes, this one. Okay. So even in the dollar, okay, we broke down below the 18-day moving average, but it did not confirm. This would be the 3rd day. And on a 3rd day, it's actually over right now. Okay. And we see that over and over again. For example, here, for example, No, actually, where is it? Where is the March? Right here. So as you can see here, it tried to break below the 18-day moving average, but then it popped back up within 3 days. All right. So same thing here. It went below the 18-day moving average. It couldn't even close below it and popped up. Okay, so there seems to be this rule of three. Okay, this rule of three is actually what helped us enter into our FXI puts earlier on in about a month ago, that we're out of now. AUD USD, same thing. When we look at, remember when the COVID announcements came? Oh, this is not it. This is not it. Australian dollar. Where is it? Oh, this one. Okay. Oh no, that level was not a moving average level. That was a actual pivot point, right? Yeah, that was a pivot point. So this one too, remember when they said, oh, all those COVID restrictions are being lifted in China, and it closed over our pivot points, but then it didn't give us that third day confirmation. On the third day, it dropped, right? It dropped. So that 3-day rule, there seems to be this 3-day rule. And if you go to all these currencies, Canadian dollar, I also tested this out in Canadian dollar, the US dollar, euro, Australian dollar, it all seems to be the same thing, that this 3-day rule seems to happen. Sometimes at a key level, it'll pop and close over or under it for 2 days and then reverse on the third. There seems to be that thing, especially starting from around mid-January. From mid-January on, that rule of three seems to be the thing. Oh, it happened right here too. Popped over this pivot and then went right back down the next day. Okay, so again, guys, when you look at these currency markets as a trigger or some sort of indicator, always remember this rule of three. I think that rule of three is important. We got to wait for 3-day confirmation before we make a move. I think that would be safer. Yes, we may lose out. We may miss out on some trades because of that. But I would rather us miss out on a few trades than be completely wrong. Because if you're completely wrong in this market, you lose a lot. Okay. And again, the big moves are coming, probably within the next 6 to 8 weeks. I want my portfolio to be intact for me to take advantage of that when that time comes in about 6 to 8 weeks. So right now, I think it's better to be patient and just sit tight. All right. So that is the update to the plan. I wanted to make sure that you guys knew that. Okay. So that's the update to the plan. Let's take a look at some of our other indicators that we're looking at. Let's look through the data. Okay. Because it's been a while since we've taken a look at those. XAU, gold to copper, it's still giving us that risk off signal. Okay. Remember, guys, when this is the commodities market way of telling us what is in demand. Store of value, and is store of value more important, or is industrial output more important? When this is down, it's risk on. When it's up, risk off. So we're still in an upward trend in this. And actually today, oh my God, look at that. See, it tried to break down today. It tried to break down. So today will be the first close under the 18-day moving average if it decides to close at these levels. But I would not take that as a signal. I would wait for 2 more days of confirmation, because we might not get it. We might get this down and then back up. And recently, gold has been trading like a currency. All right. Let's actually take a look at gold and see what's going on. Yeah, look at that. Same thing with gold. Okay, same thing with gold. All right. Hitting its 18-day moving average, falling back down. Okay. We shall see what happens to this. All right, we'll see what happens. That's gold. Let's see here. TIP TLT coming back down. Okay. Inflation worries, deflation worries. If I told you this over the weekend, guys, if TIP TLT gets the the 2 standard deviation Bollinger Band, the lower Bollinger Band, and it starts riding it down, I think that is the bond market's message to the Fed to hurry up and start cutting rates. Okay. In the end, everybody thinks the market follows the Fed. It's actually the other way around. The Fed follows the market. The Federal Reserve, is actually a private corporation. It's made up by its member banks. So these big banks, they are members of a bigger consortium, okay, which is the Federal Reserve. The governors are picked by politicians, and the Federal Reserve chairman, you can think of him as an agent for all the big banks, okay? He represents the big banks, the federal chairman, the Federal Reserve chairman, okay? And the governors represent the government, all right? And, and so who do they really work for? Who do they really listen to? It's the bond market. Everybody works for the bond market in the end. There was a famous politician. I forgot who it was. There was a famous politician who said that if he ever was reborn and came back, he would come back as the bond market because everybody needs to follow him. All right. And so that, there's a reason why, that these kind of indicators, they work. It's because, the Federal Reserve takes a look at these, okay? So in the end, the Federal Reserve is going to do whatever the bond market tells it to do, all right? And again, I think if this starts writing the Bollinger Band down like this, I think that's the bond market telling the Fed, hurry up, start cutting rates, okay? Hurry up. So, this also happened during Volcker as well. I mean, TIP and TLT were not around during that time, but there were signs that the economy was slowing and that, we would have issues if rates were to go up. And Volcker kind of just ignored them all and raised rates 60 plus times. Okay. And that's really what stomped out inflation. I don't think Powell's going to do that. I just don't think Powell will do that. If he sees this going down, he's going to start cutting rates. Okay. So keep an eye on this. All right. Move index. This is the volatility in the bond market. We saw a little bit of a pullback. We're seeing increased volatility today in bonds, probably because of the upcoming FOMC we're about to see and on Wednesday. So Wednesday, this is what it looks like right now. Right now, these are the probabilities. Actually, let's just update it. This was the others morning when I was preparing for this call. Oh, so 77, 75. Okay, so it's fluctuating a couple percentage points. It's normal throughout the day. It is decided by the futures market, the Fed funds futures. Okay, so this is something that's decided by the market. This is not some like arbitrary number like some analyst came up with. No. This is based on actual money positions. This only moves when the money moves. Okay, so right now money is saying there's going to be a 75% chance of a 75 basis point hike on Wednesday. Okay, and you can actually see what the rate expectations are going forward. So that's for the July meeting. This is for the September meeting. In September, it looks like the market is pricing in a 50 basis point hike, about a 49% chance of that. So a 50 or 75%, 75 basis point hike in November. In November, it looks like a quarter point hike, or maybe even up to a 50 basis point hike for November, and for December until December. So in November, December, it's going to end. It most likely the market is pricing in. It's probably going to end around 325, 350 basis points for the target rate. Okay, and then guess what? There's actually a chance of a rate cut. Actually, did it change already? 320, 350. 320, 350, 320, 350. Oh, yeah, right here, around June, July. They're expecting 0.25% rate cut, at least a 30% chance of that in July. So we'll see. We'll see. That's what it looks like right now. Of course, this changes over time based on, again, the money positions in the Fed funds futures. So this is all, these can all change really rapidly. And we saw that actually in June. We saw that probabilities shift within like 3 or 4 sessions. Okay. What used to take weeks to change now changes within like a matter of days. All right. Sometimes like overnight it can change. All right. I know. I remember June 9th. It was like one session, and then it all changed after that ECB meeting. That was a huge monster of a bombshell meeting. Okay. So that is the expectations. Okay. So that's what we'll track this. Okay. We'll track this together, guys. Okay. So that's what it looks like right now. Right now, the 30 and 10. For the last few sessions, it was actually coming up. Now it's cooling off a bit. This going down is a huge stagflation indicator. Okay, usually this indicator works like a year in advance. So sometimes this is way in advance. All right. If we want to see on the horizon, the economic conditions improving, we'll want to see this break out and start going up. But it's not happening. Actually, if you look at the 10 and 2, we're actually getting more and more inverted. Okay? We're getting more and more inverted on the 10 and 2. This is not good for bank profits, for loans. Okay? This is not good for them. All right? So we will see. We'll see what happens to that. All right? I still think that if this keeps going down, bank stocks are just going to keep getting hurt in earnings reports. If this starts coming up, we might see a relief rally in banks. I just don't see that happening yet. Until I see, I'll believe it when I see it. Okay, but really right now it's all eyes on the dollar. Okay, this is the number one indicator right now. And again, we are over that 18-day moving average. Today is day 3. We needed this to close under this 18-day moving average today to get that 3-day confirmation. It doesn't look like we're going to get it if we close at these levels, all right? So perhaps this goes back up to highs. It could. Maybe it makes a new high. It very well could. I don't know about new highs, okay? I think it may revisit and then turn back down. Generally when it comes to currency markets, they don't move in that fashion where it's like a straight line. I mean, if you go back into the 70s, all right, let's see. Let me go to the weekly chart. It's easier to. It doesn't even go back to the 70s. Well, if you go to so some of the charts that I see, I have some historical charts. I'll try to dig them up in my computer. But if you actually look, during the 70s, we had the dollar go up, and then 72, 73 went down, 74, 75 went back up to new all-time highs. So, generally they make these multi-year processes, okay? So I do think the dollar is going to go up higher in the next few years, but I don't see that happening all in one move, though. Okay, generally it just doesn't happen in one move, but we'll see. Okay, I'll keep an open mind. I am not going to bet one way or the other. I'm just going to observe the dollar and see if it makes new highs. Then our spreads are going to do extremely well. Okay, our risk off spreads will do extremely well if that happens. So I will keep an eye on that. All right. Let's take a look. This is some of our other indicators like Bitcoin to gold. As you can see, Bitcoin to gold is now falling. It's now falling. So will we make a new lower low? That would be interesting. Okay. And then hopefully we can target that red line. That would be a huge buy level. Also for Ethereum, same thing. Ethereum is also now, Ethereum to gold is actually matching its 18-day moving average. Is right there. I think if this volatility continues, this could definitely lose it, and we might. I mean, we're not that far away from the red line here on ETH. Okay, we're not that far away at all. Okay, so this could definitely, we could see this very soon, and I will start legging into some long Ethereum right here. Okay, I will leg into that. All right, so that is what I'm taking a look at right now. That is what I see. All right. Today, I was really hoping for the dollar to remain under that 18-day moving average. In that case, I would have started doing those micro futures trades with you all. Over the weekend, I asked you guys, do you want to see long-term portfolios? You all said yes. I also asked if you guys want to see some micro futures trades. You all said yes to that as well. So I was hoping to use that 12,150 or 12,150 level to do some micro NASDAQ futures, short puts maybe. But with the dollar being like that, it changes our plan. Okay, that plan was only good for if the dollar stayed underneath its 18-day moving average. It is not staying under. It popped out on a 4-hour candle, and to me that's enough for me to change the plan and stay away. Okay, so we will see if at the end of the day that is confirmed. If it is confirmed by the end of day, then no, I will not put any. I won't do anything to my portfolio. I'll just keep it as is. If the NASDAQ, if the dollar does close under that 18-day moving average, and we are still around these levels in the NASDAQ, I may attempt a short out the money put. Okay, I may attempt one. All right, I'll keep it really small. I'll keep it to one micro contract, which is nothing. One micro contract, I think, for an at the money put 30 days out, I think it'll pay. I think it's like 500 points. 500 points is like what, $1,000. Everybody's portfolio is different, but for me, $1,000 of risk is really not that much. It's less than a lotto. So I will just, I'll just keep it to one micro contract and just, test it out, and you all can follow. But again, I know in the last couple of minutes before trade, this really has to make a defining move lower. Okay, it really has to look like it's going to close below this. If not, I'm not doing any long positions. Because here's the thing: when the dollar goes up, it puts a lid on everything. Okay, look at the NASDAQ priced in euros. Okay, look at the NASDAQ priced in euros. We broke out of our June highs, and this is just a back test of that. Okay, when you don't have all this, and if you actually look at the performance of it, if you look at the NASDAQ in relation to euros, it's only down 1%, but the NASDAQ denominated in dollars is down 2%. S&P 500 denominated in euros only down 0.3%, but we're down 1.25% denominated in dollars. So this dollar going up puts a lid on that reward, okay? And again, it's all about reward to risk. If my reward is getting capped because of this dollar, then that changes the reward to risk paradigm. And when that reward is not as good for the risk I'm taking, then I'm not going to put that risk in it, okay? I'm only going to put risk in my portfolio if I get paid to take that risk. The reward has to justify it, okay? And as the dollar goes up, that reward becomes less and less, all right? It just becomes less and less. So these euro-denominated charts, I think, are going to come in handy, okay, if the dollar goes down. But if the dollar doesn't go down, then no, then that all bets are off. All long bets are off. Any risk on bet is just off the table right now, as long as the dollar's going up. Okay, so that's that. Yeah. So this is gonna be something to watch. Okay. Oh, our last indicator that we always like to look at, bonds. So yes, bond liquidity, junk bond liquidity is increasing, and as you can see, 1, 2, 3, 4, 5, 6, 7. Now we've had 7 days of advances over declines. This is the first step of liquidity entering back into the market. And again, this just 7 days or 6, however many days in a row with advances, that's not good enough. That is not good enough as an indicator. What I want is on the next pullback, if it can create a higher low and then come back up, that's when we know the bottom is near in risk assets, okay? But just 6 days in a row, that's just a beginning. That's just the setup, okay? The setup is there for this to give us that high quality signal. But on the next pullback, it really has to make that higher low, okay? So this by itself is nothing. All right, just like here. Look, remember in June, end of May, early June, it went up, but then it couldn't maintain. It created a divergence actually with the S&P 500, and then it created a new low, right? So that could be what happens here. Who knows? It could happen this way here. What if this is just another a local high, and then it makes a new lower low? Well, then that means this trend is continuing. This bear trend is then continuing for a while. Okay. So again, we got to keep an open mind. It's not about the stories that we tell ourselves. It's not the stories that we hear, but it's really, we really want to base it off of unemotional data. Okay. So right now, again, I remain neutral with a bearish bias, a slight bearish bias. Okay. Mostly neutral with a slight bearish bias. Okay. Until all of these start changing. All right. Our high-low line still hasn't curled up. Still has not curled up. Still going down. Still going down. Okay. Let's see what the current high-low is. Not the cumulative high-low, but just the high-low. What is the high-low right now? Oh, it's negative. So if it closes negative again, it will still keep going down. Okay. So again, usually, when I studied bear markets before, usually the end of the bear market is when this starts curling up. It curls up. It usually makes a higher low. And then that is the buy the dip signal. That is the buy the dip signal right there. Okay. We haven't seen it yet. Until I see that, it won't happen. This right here, people, actually, some of you all have messaged me. Oh, was the buy the dip signal? Did it happen in June because of this? I know some of you guys are tracking this yourselves. No, this never actually curled up. It actually flattened, and it never moved higher than its 200-day moving average. Or no, I'm sorry, it's 20-day moving average. It's 20 exponential moving average. It actually needs to curl up over all of its moving averages, so 29 and 4. Okay, why does it do that? I don't know. I just look at every bear market beforehand. This is what happens, and if it doesn't, usually it's just a bear market rally. Okay, so that's why I keep telling you guys. I think that we're gonna see one more bear market rally and one more big move down, because this hasn't curled up yet. Usually if this hasn't curled up yet, we usually see another leg lower, usually at a supply zone or a hedging demand zone. Okay. And again, that demand zone is around 4,300. So if we get there, I'll short there, but I don't know. We'll see. If the dollar keeps going up, then it's never going to get there. If the dollar keeps going up, it's never going to get there. It's just going to keep going down. Okay. So again, that's good for our existing put spreads, but I'm mostly in cash. I'm 95% in cash. My Euro puts and my Dow Jones Industrial Average puts are all paid for by the Baidu long that we did a week or two ago. So it's all paid for. I think out of the UVXY, FEZ, and DIA spreads that I have, I need to lose about 65% of that in order for me to start facing a loss from mid-June when we started creating these spreads till now. So as long as I get out with 40% or more, I'm not going to have a loss. So the reason why I'm telling you this is because that is my number one priority right now, is to not have a drawdown in my account. Okay, that is the most important. That is my first, second, and third priorities right now, is to not lose any money. Okay, so I am not going to introduce any risk into my portfolio unless I'm for sure. Okay, and even if I am for sure, I'm probably only going to do very small positions. Okay, again, the big moves are coming. You want your full portfolio ready for those big moves where we can really lean into it with our data, with everything supporting us, okay? That time will come. I think it's about 6 to 8 weeks away, okay? So until then, keep your position small and protect your capital. when you see a green position start going into the red, all right, or the black line is the break-even mark, okay? So when you see your green positions starting to challenge that black line and it's starting to go into the red, manage that risk, okay? I'm not going to tell you what to do, but manage that risk, all right? Again, I'm just telling you what I'm doing, and just know that I'm really 100% focused on capital preservation right now. Again, most of my spreads right now are paid for. And again, I would have to face a 60% loss on my spreads to face a loss from mid-June till now. So as long as I get out with 40% plus of whatever I have opened right now, I'm in the profit. Okay. So it's mostly pure profit for me that I'm playing with. All right. So again, that just tells you my focus. It's all about capital preservation right now and keeping things small. All right. I think that's the right way to go, but that's just me. All right. You're free to do what you think is right. All right. Let's look at cryptos, because cryptos is exciting right now. Crypto market, when it comes to options in S&P 500 right now, the exciting thing is for September. And as we get closer and closer to September, as we get into August, we are going to take a much deeper look into the S&P 500 options chain. Okay, but for now, let's look at Ethereum, because I see a lot of excitement in this. So let's take a look at Ethereum. I just want to see how much the notional value of hedging for the notional value for options has gone down. It's still bigger than Bitcoin's. Okay, remember a couple days ago we saw that live. We saw Ethereum pass Bitcoin as the biggest options market in crypto. All right, so that's kind of crazy actually. It's got only half the volume that Bitcoin does on the spot market. And, obviously it's a much smaller market than Bitcoin, but its options market, however, is bigger. So that it could mean increased speculation. It could also mean increased hedging, but I think it's mostly increased speculation. More and more people are speculating and participating in Ethereum price movement. All right. In the last 24 hours, it looks like we're more even between puts and calls. Let's see here. Is there anything exciting? But when it comes to block trades, way more block trades today than usual. Usually we see that retail side or the regular screen trades as bigger, but this time we saw block trades being bigger. And right now, what are people looking at? People are looking at Decembers. Oh, so we're looking at some Decembers. Oh, just like institutions. Institutions always look about 6 to 9 months out, or 6 months to a year out. So is that where, I forgot. They don't save your settings. I don't know why they do that. Why don't they have something where you can save your settings? There we go. Okay, good. So December. So it looks like, yes, huge amounts of volume. Look at that. 3,000. Delta 19. It's that Delta 19 that comes back again. It's that Delta 19. Remember last week where I went crazy over that Delta 19? Because that's the same as where a lot of the speculation is also happening on the SPX options chain. SPX options chain. We're seeing, I think it was 4,500 in December that we are looking at as where there's a lot of interest, call buildups. I mean, we'll take a look right now and see. Ba-bum. Let's see. Wow, there's still a lot of puts. I mean, there's a lot of Hawaiian puts too. 4,500 right here. Okay, so the deltas have dropped off a little bit because the market is selling off. But yeah, we saw a lot of, remember that one day we saw a lot of volume coming into the 4,500 calls. So it's around Delta 14. So they were around Delta 18 last week. Okay, now they're at Delta 14. All right, so there's still there. It's very similar deltas that we're looking at. So we're looking for, I think institutions are looking for a risk-on environment into the end of the year. Okay, all right, I think that's what they're betting on, but we shall see. Okay, again, I think it's all about that dollar. All right, so just be very careful when you trade. Okay. If you've got winning positions, not a bad idea to take some profits. Okay, we see that big reversals can happen, and this week there's a lot of things happening. Okay, there's a lot of things happening. We have ERs, we've got major tech ERs, we've got FOMC, we've got a lot of economic data. Oh, speaking of ERs, one of the things I also wanted to talk about was commodities. I know some of you guys also trade commodities actively as well. One of the plays that we have is for Pilgrim's Pride company, which is our meat play. We said we were going to take this if it gets down to certain levels. And these levels actually, I think, are going to be a lot more accurate because Pilgrim's Pride does most of their business in the United States. So they don't really have as much of that foreign currency exposure. But, what I'm looking for is a touch of that 2 standard deviation Bollinger Band, which actually corresponds to, on the weekly chart, it corresponds to around this level here, which is our 1 standard deviation our 18-day moving average right here. Okay, so if it touches that level, I am going to start. I'm going to start legging in. Okay, I'm going to start legging in. So. We shall see. Oh, I see some voice chat text. Would you questions? Be careful with your TSM puts. Wouldn't it be bearish for TSM? Yeah, TSM again. I think my plan still stands. If it gets to 88, I don't think it's going to get to 88 now. I really don't think so. I think it's on its way down. I missed my entry by 21 cents. It is what it is. The dollar volatility makes precision very, very difficult. Makes it very difficult. Okay. It is what it is. There will be more opportunities. In 6 to 8 weeks, that's when the big moves will happen. Okay. If they get some subsidies out of this, sure. But surface level, not seeing it as a boon. The money will take 3 to 5 years to be implemented. Not enough talent to actually work, no matter how much money they throw at it. I don't know what that means. Advanced 79 billion China semiconductor competition bill. Okay. Oh, to fund domestic production of chips. Yeah. TSM has a U.S. plant. You know this, guys, right? Hopefully you guys know this. They do. I think they have a plant in Washington, I want to say. I believe it's in Washington. Okay. But yeah, I don't think that makes a material change to TSM. I mean, I might be wrong. But this one I'm playing more just purely price action. And I really wanted it to touch the 2 standard deviation Bollinger Band and then sell off. But we'll see. Actually, let me see. What is the Taiwan ETF doing? Oh, yeah. The Taiwan ETF is also selling off, too. I was considering shorting this last week. I never pulled the trigger on this. Man, there will be more opportunities. There will be more, okay? All right, let's just go through our positions one more time, okay? UVXY, I am still long. Still long the same spreads, okay? The 14.24, 15... 20. Long the 14, short the 24, long the 15, short the 20. Okay, so these are call vertical debit spreads. DIA still in it. All right, I got till October. I'm still in the 300 290 put spreads. Long the 300, short the 290. I'm also still in our FEZ Eurozone ETF for November. Long the 32, short the 27. This is the 32.27. Put vertical debit spread. All right. My plan has changed. I'm not going long at that 12,150 level on the NQ. The reason why is because the dollar. Okay. It's really all about that dollar. All right. That dollar is going up. And so as the dollar goes up, that puts a lid on reward. All right. And so the plan from last week was to do a little swing long if the dollar remained under its 18-day moving average. Now that is not the case, and so therefore I did not take it there. Actually, it looks like it's coming back from its lows, but who knows? At the end of the day, it might sell off some more. Okay, so there's no way to really effectively. I mean, you could manage that risk. I mean, you could, but again, the odds just get more and more against you for a higher reward the higher the dollar goes. And again, if the dollar closes over this 18-day moving average, all risk on positions are gone out the window, no more. Okay, so that's the number one thing I'm looking at is the dollar. Number two thing I'm looking at is the euro. Okay, euro, again, it closed under its 18-day moving average. This would be the third day confirmation that it needs. Over the 18-day moving average. And what we wanted to see for risk on was 3-day confirmation of the euro closing over the 18-day moving average. That we're not seeing that. The third day confirmation now is lower. So we might see some more risk off sentiment, okay, which is good for our FEZ spreads. Our FEZ is going to do very well if this continues down, okay? We're going to make a lot of money on those FEZ puts if this keeps going down, okay? So let's see what happens, okay? So that is what I'm seeing. That's Checkmate trading in a nutshell. That's high noon highlights. Boom, all right? Any questions? Any questions, concerns, rude remarks? This is your time. Going once. Going twice. Sold. Okay, all right, then we'll wrap it up here. Oh, I see somebody typing. Oh, well, thank you for joining me, board surgeon. It's always good to see you here. All right. I will post the videos on wiretap tapes, and I will I'll go over I'll post the videos, and then I will keep our Twitch stream up so that you all can monitor the data throughout the day. Actually, you know what? I didn't even go through my full plan. Let me go through my full position and plan one more time. I forgot to go over the other stocks and stuff too. Wait, hold on. So let me go through the positions and plan one more time. UVXY, UVXY, I'm still in. The December spreads are call spreads from before. Again, the 14.24 call verticals and the 15.20. Long the 14, short the 24. Long the 15, short the 20. Okay. FEZ. November put spreads. I'm still in them. The 32. The 32.27. Long the 32, short the 27. And those are doing quite well now, as well as the DIA, okay, the Dow Jones Industrial Average ETF, long the 30, short the 290. That's the 300-290 put vertical debits. I'm going to stay in them just because the dollar is up. It made its close over it made a 4-hour close over the 18-day moving average. This would have been day 3 confirmation of it closing under the 18-day moving average, but that does not look like it's the case if it closes at these levels, okay? So if the dollar closes at these levels, then it almost looks like it's a fake breakdown, all right? So all those plans from before for risk on was when this would close below the 18-day moving average. Remember the rule of 3 that I posted on Discord. This would be the 3rd day. It is not happening, okay? So I did not take our NQ long that I said I was going to take. I will not be doing any risk on until that dollar drops, all right? The only risk on that I am willing to take and this is the part that I forgot to mention earlier, was PPC. Okay, so again, if we have earnings coming out for PPC soon, this is our meat play. And again, beef prices are going up. Whenever beef prices go up, it tends to be that the price of chicken and pork goes up too. So I actually think that this could be a good candidate for some good earnings down the road. And again, what I'm looking for is around that 20, this 2 standard deviation Bollinger Band on a daily basis. I'm looking at this level right here to enter. All right. And again, for Bitcoin, Ethereum, I am looking at Ethereum. I really wanted to touch that red dotted line. This is the Ethereum gold chart, Ethereum to gold ratio. I really wanted to touch this red line. Okay, you can copy this chart if you want. I'll turn off the Bollinger Band so it's easier to see the red line. This is that red sloping line. It starts on around March 2020. So it's the 2020 uptrend line. And if you just keep drawing it, it literally touched it to the tick in late June. If it touches that again, I will be scaling into Ethereum. Bitcoin, I will also be scaling in if it touches that red line as well. Okay. And that is an uptrend that started back in 2016, and late 2016 is the same uptrend for all of 2016 into 2017. It touched in 2018-19, again in 2020 during COVID. I think it touches one more time here, and if it does, I will be scaling in. All right, gold. I told you guys about gold as well too last time, and I will still be. I still have the same plan for gold. No different. Gold, I will get in if it retouches that 1680 zone. If it revisits that, I will get into some call vertical debit spreads. Okay, so that is my updated plan. I am keeping those risk off spreads, you know, the FEZ puts, the Dow Jones puts, and also the UVXY calls. Maybe we see a little bit of action this week in volatility, and if we do, I'll try to cash them out at a good profit. And as long as the dollar keeps going up, I think that volatility keeps going up too. All right, so that is my updated plan. Okay, boom. MSC, I think you were trying to say something before, but then I had to redo the plan part. Did you have a question, or do you have something to add? No, MSC? Okay. Well, in that case, I'm going to stop the stream. And again, guys, I'm going to post everything in Wiretap tapes. I have the Twitch stream running. You guys can take a look at the charts and data that I stream on a daily basis. I'll keep that up. And we will be back tomorrow, and I'll hang around in the Discord for a bit. I'll also come back and I'll come back to the pit and maybe do another voice call at the end of the day. If there's a lot of people that are still on the Discord. Okay, so trade safe. Again, the big moves are coming. Stay patient. Protect your capital until then. And the big moves are coming. And I think we're gonna have a very good quarter once we see those signals popping up.